Alright traders, I'm here with a trade that I just opened and I want to show you my reason and thinking behind opening up this trade. I got on the US dollar Swiss franc, and what I saw here, first I always look at the daily chart, and looking at the daily chart you can see that this has been in a downtrend, so, and we're underneath the Kumo, so our sentiment is to go short. So this is a bearish market for the dollar Swiss franc. So I go back to my hourly chart and I'm going to be looking for short trades. Now as you see, it wasn't an uptrend here, and then you could see how the Kumo, it was in a nice trend and then it started to open up and then it started to flatten out. Now it flattened out here, and you could see where price right here just stayed in this little range here, and then we got a Kumo twist right here. So now it's a bearish Kumo. Um, let's see. So then my rationale was I'll wait to see what I get. I got a bearish Kumo. I got my Chiku span underneath price, so that's bearish. And then I got the TK cross right here. Okay, I got a 100 bar moving average right here that I put in. I use it for a lot of support and resistance because I notice that the market pays attention to it a lot. And then my 200 is here. Okay, and then what I see back here, you could see where the market, you know, looked at that 100 bar moving average and respected it and bounced right off of it. Okay, so I like to get some confirmation from that also, because a lot of times you get into these Kumo breakouts and the 100 bar moving average runs right along, basically it runs right along that Kumo. If you look at that, you'll see how it runs along the Kumo right here, and it runs right here, and a lot of times you'll get into a breakout and then your next thing you'll be running into is the 100 bar moving average. So you don't want that to stop you. You want to look at that because that's something that a lot of traders look at, so I wanted it on my chart. Okay, my rationale for this trade, I got the TK cross, my Tenkan-Sen and my Kijun-Sen cross right here, and I got it on this bar after this bar closed. So I opened up my trade. I opened up my trade right here, and the trade started to, it looks like it wants to do a retrace. But my thinking here also on a retrace is this. I'm going to put a line in here and show you something. From here to there. Okay. We'll color that a little darker. Make it a little thicker. From this high to this low before the market retraced. Okay, that's right there. That's as long as this line right here. So now from the next swing high to where the market seems to be retracing, right here, or a little bit below that. So it's almost a 1-to-1 ratio, and the market likes 1-to-1 ratio. So if it's going to be this leg, A to B, this C to D should equal A to B. Alright, so C to D should be equal to A to B, and if it is, the market will start retracing. It'll pull back and then it'll go again. So you could look at this to pull back to this. A nice spot will be this 200 and bounce off of it and then continue the downtrend, or else we put our Fibonacci's in here. And then we say that we bounced off of this right here, and we'll go up to 38.2, which will be a little above the 200. We could bounce off to 50 because there was some support right here, and now that support will be resistance. There was a little bit of support right here, as you can see on the 50. and then this will be resistance, so it could come up to the 50 and bounce off, and it could come up to this Kijun, this darker blue line right here. This Kijun always is a support area. A lot of times the market likes to retrace to that, so the market doesn't want to get far away from that Kijun. So a lot of times you get into these trades where you have a cross and then the market's far away from the Kijun, and then what happens is the market retraces back up towards that Kijun, and then it runs again. So it's hours and hours before your trade is in the profit, but you have to be patient. That's why a lot of times, maybe even on the crossover, if you see a long, a break like this long pull, then a pull back, and then another long stretch, a lot of times maybe you want to wait for a pullback, because then you're getting in. Right now you're getting in at the low, and now the market's going to probably pull back. But I'm in here, and the reason I'm in is because I'm following the rules of the Ichimoku system. So if I follow these Ichimoku rules, I get in. I got my TK cross bearish. I got a bearish Kumo twist. My price is bearish underneath of the Kumo, and my Chiku span is bearish underneath the price and Kumo. So those are all bearish signs for me to take this trade. So that's the reason I took the trade, and I'm going to follow my rules and see where I go. Now, what I did to get my profit targets, I could either wait for another TK cross and it'll be a bullish cross, and then I'll get out the market, or I can wait for price to cross and close above the Kijun. That's another place that I could get out. That's another sign to get out. But a lot of times I like to do this. Show you here. Okay, price came up here and now it's coming back down. Here's a support level down here. Price came down, bounced off of that support level, it retraced, and now it's bouncing off of this level. I'm looking at it to come back down to this level, at least to this level, and then you could get out if you wanted to, and then you could see what price does from there. But that's about it. That's my level, my profit level, and we'll just wait and see what happens with this trade. I'll try to come back later and show you what's going on with it. So until next time, hopefully I'm helping somebody. If you need any help, need any questions answered, just contact me, let me know. Until next time, God bless. So long.